Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, it was a choppy session overnight with the US dollar index, which measures the greenback strength against a basket of 6 major rivals, took a tumble of around 0.5%, and now, as you can see, is coasting around the 96 handle. It is assessed from the technical pattern here that it is relatively weak and therefore could see a little bit more slippage, and that is a close under 95.75, may even see a drop down towards 95 figure. This in terms could give further momentum for the euro as it now heads towards the resistant level of 113.45, but the RSI back in positive territory along with the MACD. Let's see how the market plays towards either level of 113.45 or with a cap seen roughly just a little bit higher around 114 figure 5. This is where most of the rejections were seen and reassessed from there. The market took a slight upstep after the comments department on Wednesday said the US economy grew at 2.3% rate in the third quarter, which was slightly better than previously thought. The report said the gains were driven by a jump in spending for services, especially for international travel and transportation services. As many COVID-19 travel restrictions were lifted, there was a better number in that quarter. Viewing the Australian dollar, the market also took a step up, and as you can see, is back towards the top side of the range seen around 72.15. The market did respect that level of 70.90, and from the last 2 days, now presses that top side and still likely to into the European session. If we do see a close of New York, could see above that level, could see a move to 72.65 as a stop loss move. But I feel where the 60-day moving average is, it's around that 72.65-80 area, is that good supply should return and eventually see the market take a step back. The dollar yen took a challenge to the upside and posted a weak gravestone doji. And as you can see here from that level of 114.15.25, still not quite backing away yet. However, a little bit of divergence there, a weak MACD. I still feel the market will fail towards this 15.25 level around 114 and take a pullback to 113.70 and down to the low 113. From mentioning yesterday that I felt the technicals were still relatively strong for the pound, a good candle came through to the bull case and now looks back to that top side of the range seen around 133.80-90. Still relatively bullish, and a good MACD that supports the positive case could see the break beyond that level and look towards 134.60 before profit taking emerges. KGN still coasting to a slightly bullish case, and from the last sort of 12 hours, the market is still holding relatively firm and therefore could see a test up towards 89.15.20 and reassess from there. As I do feel the bears are not too far away for an ambush and eventually see a move back towards the bottom side of this range around 87.20.25. Looking to gold, well, the market struggled to break through that 1,788 level, and with the recent economic data coming out of the US and a slip in the dollar, the market's taking a step back towards that 1,800 level. Still back to familiar levels. We are getting close towards that top side around 1,815. I feel the market from previously from that gravestone doji had a good rejection. Like previously, I feel the market will probably do the same pattern as history tends to repeat itself and see a rejection from here and look back towards that bottom 1,788 or lower for where the bulls are camped out at 1,757 to 64. The bullish call since the dragonfly doji still holds and now looks towards that initial target of $73.55.65. Note that a break above there will give further indication to the upside and give scope up towards 76.20.50 and reassess from there. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.